What's up, guys? Welcome to the Cashcraft, your daily dose of finance and technology news and updates, script. The most desperate narrative in crypto right now is that Bitcoin will replace gold, and it's completely missing the point. Here's what matters. Bitcoin's entire identity crisis right now stems from one problem. Every few years, the story changes. Digital gold, inflation hedge, uncorrelated asset, payment network. Each narrative gets tested by reality, fails to stick, and the community scrambles for the next one. The latest pitch, that Bitcoin will displace gold's $18 trillion market cap, sounds ambitious until you realize it's just another distraction from what Bitcoin actually needs to survive long term. Let's start with what we know. Bitcoin has cycled through more origin stories than a comic book reboot. In the early days, it was peer-to-peer electronic cash. Then the 2013 Cyprus banking crisis repositioned it as a safe haven from government seizure. By 2017, it was digital gold. When inflation spiked in 2021, it became an inflation hedge until it crashed alongside tech stocks and revealed it was actually just a risk asset in disguise. Each time, believers thought they'd found the narrative that would last. Each time, the market called their bluff. Now, in May 2026, with Bitcoin struggling to maintain relevance as institutional interest plateaus, a new claim is making the rounds on crypto Twitter. The argument goes like this: gold's market cap sits around $18 trillion. Bitcoin's is a fraction of that. Therefore, Bitcoin has massive upside as it gradually displaces gold as the preferred store of value. It's a clean story. It's quantifiable. And according to Alexander Blume, writing in CoinDesk, it's bordering on lunacy. Here's why. Gold isn't just sitting there waiting to be disrupted. It's embedded in central bank reserves, jewelry markets, industrial applications, and thousands of years of cultural significance. Bitcoin enthusiasts pointing at that $18 trillion like it's up for grabs are confusing market cap with actual utility. Gold doesn't need a narrative. It doesn't need venture capital or retail FOMO or Elon Musk tweets. It just exists, doing what it's done for millennia. Bitcoin, meanwhile, can't seem to go 6 months without needing to reinvent its reason for existing. But there's where it gets interesting. The problem isn't that Bitcoin lacks a narrative. The problem is that it keeps chasing narratives instead of building infrastructure. Every time the community latches onto a new story, whether it's replacing gold or banking the unbanked or being uncorrelated to stocks, they're essentially admitting the previous story didn't work. And markets notice. Institutional investors don't want an asset that needs a new elevator pitch every cycle. They want predictability. They want boring. They want something that does one thing exceptionally well, not something that claims to do everything. The desperation Blume identifies isn't just about gold. It's about the fact that Bitcoin's actual use case, the one that might actually last, isn't sexy enough for the hype cycle. What is that use case? It's not replacing gold. It's not replacing the dollar. It's being a decentralized, censorship-resistant settlement layer for large transactions where trust is expensive or impossible. That's it. That's the thing Bitcoin does better than any alternative. But you can't 100x on that narrative. You can't get retail investors excited about final settlement infrastructure. So instead, the community keeps reaching for grander, more implausible stories. Now, pay attention to this next part. The reason this matters right now, in 2026, is that we're watching the consequences of narrative whiplash in real time. Bitcoin's correlation with tech stocks hasn't disappeared. Its volatility hasn't decreased. Its adoption as actual currency remains negligible outside of niche use cases. And yet, instead of acknowledging what Bitcoin actually is, a volatile, speculative asset with some unique technical properties, the loudest voices are doubling down on fantasies about displacing gold. What most people don't realize is that this desperation is actually a signal. When a community has to keep inventing new reasons for an asset to exist, it suggests the asset hasn't found product market fit. And that's fine for a technology that's only 17 years old. But it's not fine if you're asking people to bet their financial future on it. The gold narrative isn't just wrong. It's a distraction from the harder work of figuring out what Bitcoin actually does well and building around that. The bigger picture here is this. Narratives don't create value. Utility creates value. Narratives just explain the value that already exists. Bitcoin keeps getting this backwards. Instead of building infrastructure that makes the technology indispensable for specific use cases, the community keeps trying to manifest new use cases through storytelling. And every time a narrative fails to materialize, trust erodes a little more. The question you should be asking yourself is whether Bitcoin needs a narrative at all, or whether it just needs time to prove what it can actually do without the hype. Because the assets that last, the ones that survive multiple cycles and become genuine infrastructure, don't need to convince you they're important. They just become too useful to ignore. Personally, I'm still watching to see if Bitcoin can mature past this narrative addiction. The technology has genuine properties worth preserving, but the community's desperation for the next big story makes me skeptical that anyone's focused on the long game. That's all for today, folks. If you found this helpful, make sure to like and subscribe to The Cash Craft for more finance and tech news. Drop a comment below with your thoughts, and I will see you in the next one.